Hi traders! Have you ever wondered how professional traders predict key levels in the market? Well, in this video, we're just going to be diving into one of the most powerful tools in technical analysis, and that is the Fibonacci retracement and extension levels. Now, this is a must-know strategy for every beginner looking to improve their trading skills. Okay? By the end of this video, you'll know exactly how to draw Fibonacci retracement levels correctly, how to use Fibonacci levels to find support and resistance, how to combine Fibonacci with price action for stronger trade setups, and how to apply a simple Fibonacci trading strategy that works in Forex, stocks, and crypto. Alright? If you are ready to take your trading to the next level, hit that like button, subscribe to the channel, and turn on notifications so you never miss an update. Okay, let us get into it. Now, Fibonacci retracement is based on a mathematical sequence found in nature, art, and even financial markets. All right, traders use it to find potential reversal and continuation points. Okay, now the key Fibonacci levels we focus on are the 23.6%, which represents a minor retracement level, the 38.2%, which represents a shallow pullback level, the 50%, which is a psychological level that is not an official Fibonacci number but widely used. Then the 61.8%, which is the golden ratio. It is the most powerful retracement level, okay? Then we have the 78.6%, which is a deep pullback level, often used for reversals. Now, when price pulls back to these levels in a trending market, it often finds support or resistance before continuing in the original direction, okay? So these levels are not magic, okay? They work because traders all over the world use them, making them a self-fulfilling tool. All right? Now that we know why Fibonacci works, let's go over how to draw Fibonacci retracement levels properly. The first step is to identify a clear trend. All right? Identify a clear trend, because Fibonacci works best in trending markets. Okay, then you place the Fibonacci tool. Let me just delete this. You place the Fibonacci tool from swing low. You can see this is a swing low. From swing low to swing high. Can you see that? From swing low to swing high in an uptrend, right? In an uptrend. But if it's a downtrend, it's going to be from swing high to swing low. That's for downtrend. Okay, then you watch how price. Okay, I'm just going to remove this in order to avoid interruption with the other one. Okay, so after you have done that, you watch how price reacts at key Fibonacci levels, especially 38.2%, 50%, and 61.8%. Okay, now many beginners make the mistake of placing Fibonacci levels incorrectly. Always ensure you are using the most recent significant swing points for accurate levels. Okay, now Fibonacci is a powerful tool, but it works best when combined with price action. Here's how. You should be looking for confluence. When a Fibonacci level aligns with support or resistance, for example, if you had already manually drawn your support and resistance level, remember that support and resistance level are areas where you had multiple rejections, at least two rejections, at least two. Okay, so if you have already drawn your manual levels and then you draw your Fibonacci and you notice that Fibonacci levels are also aligning with your horizontal support and resistance levels, it could even mean a stronger support or resistance. Then in addition to that confluence, look for candlestick patterns around those levels. For example, pin bars, engulfing patterns, engulfing candles, dojis, and all of that around the Fibonacci levels to confirm potential reversals. Then for your trend confirmation, if the trend is strong, the price often bounces off the 38.2% or 50% levels before continuing. Now, in this particular trend, we can see that, okay, this was around the end of the trend already. So I'm just going to, let us look for another example. Okay, let me use from here to here. No. Let's use a better trending market. Let's use a better trending market. All right, let's use a better trending market. Okay, let me use the daily time frame. Okay, let's work with the daily time frame. So this is a sell trend, and remember, for sell you draw from swing high to swing low. So you can see from swing high to swing low. Now you can see that in this strong trend, the price got rejected around the 38.2%. Can you see that? It got rejected around the 38.2% Fibonacci level. Okay, before it continued in the direction of the trend. So now let's just put everything together into a simple Fibonacci trading strategy that you can start using today. The first step is to identify a strong trend in the market. After you have done that, use the Fibonacci retracement tool. If it is a buy trend, then it's going to be from swing low to swing high. In this case, you can see that it got rejected around the 61.8%. You can see, just trace it. You can see it got rejected around 61.8%. Okay, so if it is a buy trend, it's going to be from swing low to swing high. All right, if it's a sell trend, it's going to be from swing high to swing low. So having done that, you wait for price pullback. You wait for price to pull back to the 38.2% or 50% or 61.8%. Then you look for confirmation signals such as rejection candlesticks, support or resistance, or trend line bounce. In this case, we had a bearish engulfing. Okay, and you can see that the sell actually continued all the way down. Right? Then you can enter your trade and set your stop loss. If it is a buy trade, it's going to be below the swing low. If it's a sell trade, it's going to be above the swing high. Okay, then you set your take profits at the previous high if it is a buy trade, or previous low if it is a sell trade. All right, so basically use support levels to stake your profits if it is a sell trade, or you can use resistance levels to stake your take profit if it is a buy trade. Okay, you can also make use of the Fibonacci extension, or rather expansion, Fibonacci expansion levels. All right, you can also make use of that. So for the Fibonacci expansion levels, you can be targeting remember that we are looking for the exit for this particular move, right? We're looking for the exit for this particular move. So you can be targeting the 161.8%, or the 127.2%, or the 100%. All right. So you can be targeting either of those three levels. In this case, you can see that the price got to the 161.8%. Okay. So this strategy allows you to catch pullbacks in strong trends while managing risk effectively. And there you have it, a complete guide on how to trade with Fibonacci levels for beginners. This is one of the best tools for identifying high probability trade setups in Forex, stocks, and crypto. If you found this video valuable, hit the like button and drop a comment below, letting me know your favorite Fibonacci level. And don't forget to subscribe and turn on notifications so you never miss a new trading strategy. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.